Okay, well, good afternoon, everybody. Once again, this is Duncan Edwards, CEO at British American Business, and it's a pleasure to welcome you all to this webinar, which is part of our BAB Accelerate program. Now, normally, of course, our Accelerate program, which is aimed predominantly at growing businesses, smaller business, SMEs, is a in-person live event, and of course we can't do that today, but I am very happy to tell you that we are starting now a series of what we hope will be, what we think will be extremely helpful webinars and seminars as part of our BAB Accelerate program. This is all about resilience and continuity. We know the challenges that so many small businesses are facing, and we would like to provide some help and advice from experts that we're connected with to help those companies get through this difficult period. So I'm thrilled that the chairman of our BAB Accelerate Committee, Roger Barton of Barton Law, New York City law firm, or global law firm, I should say, is here today and will be moderating our conversation. And Roger, I'll leave you to introduce our panelists, and I'll see you all later on.
Thank you, Duncan, and welcome everybody. And I'd like to welcome our panelists, Peter Fennel from the SBA and Mark Barron from Mark's Panel. Before I get into that, though, I've got a list of sort of rules of the road for how we're going to conduct this webinar. Everyone who is attending is currently in a listen-only mode. You are muted, so you cannot chime in that fashion. However, at the bottom of your screen, there's a Q&A bubble. At least that's how it appears on my screen. And you can, at any time during the program, put a question to any one of the panelists. We may not answer it immediately, but we will hopefully come back to it and answer everyone's questions. I'm going to try to curate them because I imagine many of them will be of similar subject. We're going to have a panel speakers till about 2:50. Then we'll open it up to the questions that you all are submitting, although we may go a little off script and take some of those questions as they come in just to keep the flow going. The session, as you see, is being recorded, so in case anybody has concerns in that respect, be aware. And I want to also point out that this is the first of 3 series that we're having in the Accelerate Resilience and Continuity series. As Duncan mentioned, normally the Accelerate program, which is sort of a club within the club of BAB, is intended to be where the entrepreneurs and the SMEs get together, share information with each other. We have an interesting speaker for each of our dinners. Good food, good drinks, good community. We can only probably have one of those right now, but you can sneak a drink on the side. But the idea is to create community here virtually, and to bring in some thought leaders that are really of the moment in terms of what's on a lot of our minds, those of us running businesses. Those of you who may not know me, I'm the managing partner of Barton LLP, which is not quite worldwide, but we have offices in New York and Nashville. And a lot of the questions I'm sure many of you will have are questions that many of our clients have had over these programs as well. The next program in this series of 3 is going to be on April 23rd at 2 p.m. It's going to be communicating and engaging stakeholders in a time of crisis. So look for that. And then the third, which is going to take place the week following, is going to focus on employment and HR issues relating to the current pandemic. So with that, I'd like to introduce Peter Fennel, who's a supervisory economic development specialist and veteran business outreach officer at the SBA. Peter has over 20 years of experience in this role. In addition, leading to New York's economic development team. He's also served on the Long Island branch manager for the SBA before the New York district office. And prior to that, was in private business as well as in the military. Peter has lived in wonderful places, including the UK, as well as Germany, Turkey, and Panama. So Peter, welcome. I know you're quite busy right now, so it's great to have you even for this limited period of time. Mark Barron is a principal in the tax department at Marks Paneth. He specializes in tax, transactional tax, and he's also a lawyer. So you got two lawyers here, but I'll let Mark take the lead on those things. Mark has spent the last couple of weeks steeped in all the issues that we're going to talk about in terms of the SBA programs, government programs, the tax treatment of those programs, and other tax relief and modifications that we've had coming out of Washington. So we're going to start off with Peter, who's got about a 10-minute overview on the current programs. Then we'll get into some questions for both Mark and Peter and take your questions as well. So with that, I'll turn it over to you, Peter. Thank you.
Great. Thank you so much. I greatly appreciate this opportunity to join you today. And, at this time, go do an overview of the SBA's layered response to the COVID-19 pandemic. So I'll be covering an overview of the Economic Injury Disaster Loan, EIDL, the Economic Injury Disaster Loan and Advance, the Express Bridge Loan, Paycheck Protection Program, Small Business Debt Relief Program, and existing SBA disaster loans. So at this time, I'll begin this. Okay. The Economic Injury Disaster Loan. So eligibility, self-employed individuals, independent contractors, sole proprietors, and businesses, travel concerns, ESOPs, cooperatives, private, 501c3s, nonprofits with 500 or fewer employees. The application runs through 12/31/20. Loan amounts of up to $2 million, term up to 30 years. Interest rate for profit businesses, 3.75%, nonprofit, 2.75%. Proceeds may be used for working capital to include payroll, salaries, and sick leave, rent or mortgage payments, material costs, pre-existing debt. Security collateral, unsecured to $25,000. Loans over $25,000 will need to give SBA access to collateral. That does not mean that you need to have your loan fully collateralized, but if you have collateral, it will be used. No personal guarantees for loan amounts of up to $200,000. Payment deferral, 1 year. Interest will continue to accrue over that period. The lender is the SBA. You go to sba.gov/disaster to apply. Economic Injury Disaster Loan Advance. It's the same eligibility. Also, the SBA is the lender. It's the same application. Okay. It's just another box that's checked in the application process. So it's sba.gov/disaster. What this provides you with, again, it goes to 12/31, an advance of up to $10,000. It is forgiven. Proceeds may be used for working capital, including payroll costs, salaries, and sick leave, rent or mortgage payments, material costs, pre-existing debt. Forgiveness. Applicants shall not be required to repay advance even if they are denied the Economic Injury Disaster Loan. Turnaround is roughly 3 business days from the time the SBA gets in contact with you. So you apply. About 3 weeks later, the SBA reaches out to you for any additional information, and that's your next point of contact with the SBA. And 3 days, business days from that point, you should receive that advance funds into your account. There are no fees, and the loan, again, is available through December 31st. The Express Bridge Loan. Okay. The eligibility, any business in operation before March 13th, 2020, that is fewer than 500 employees, otherwise meets SBA's existing size standards. Credit not available elsewhere. You apply through certified SBA lending partners. These are the banks and the credit unions, SBA Express lenders. The loan availability is through September 13th, 2020. May be repaid in full or partially by the Economic Injury Disaster Loan. The loan amount is up to $25,000, term of 7 years. Must be structured as a term loan. Interest rates not to exceed prime plus 6.5% fixed rate. Proceeds may be used for working capital, including to cover operational expenses to support the survival or reopening of your business, payroll costs, salaries, sick leave, rent or mortgage payments, material costs, pre-existing debt. security collateral required, no personal guarantees, no payment deferral. Borrower may only obtain one express bridge loan, will be repaid in full or part by the economic injury disaster loan. Fees up front, no more than 2% of the guaranteed portion of the loan, maximum $500. Annual service fee, not more than 0.55% of the outstanding balance of the guaranteed portion of the loan. Application fee, the greater of 2% of the loan or $250. Late payment fee not to exceed 5% of the scheduled payment. Okay, with the express bridge loan, so you have the interaction here, you apply for the economic injury disaster loan, you would receive the advance, okay, and then you apply at the same time for the express bridge loan, and the timing of that should come in, so you should have the advance and the bridge loan to carry over to get to the economic injury disaster loan, where the terms are significantly better with the economic injury disaster loan, and you would pay off the bridge loan. Okay, so the Paycheck Protection Program. Eligibility: self-employed individuals, independent contractors, sole proprietors, and businesses, tribal concerns, and private 501c3 nonprofits of 500 fewer employees. Businesses in certain industries can have more than 500 employees if they meet existing SBA employee-based side standards. Affiliation standards are waived for small businesses in the hotel and food service industries, franchises in the SBA franchise directory, businesses that receive financial assistance from the SBA investment companies, small business investment companies licensed by the SBA, and the lender are certified SBA lending partners, your banks and credit unions for this. Okay, the loan amount is up to $10 million. Eligible payroll costs cannot exceed $100,000 in wages per employee. Term is 2 years. Interest rate is 1%. Proceeds may be used for working capital, including payroll costs, salaries, benefits, including sick leave, medical leave, or insurance payment. Renter mortgage payments, pre-existing debt payments in place before February 15th. The amount is 250% of the average monthly payroll from the past year, capped at $100,000 per employee maximum. I will mention real quickly, a lot of people are just looking at individual a payroll, but not monthly payroll. Monthly is the key here. Interest rate 1%, security collateral none, guarantees waived, payment deferral 6 month. Interest will continue to accrue over this period. Turnaround is 2 to 3 weeks. Forgiveness: 75% of the forgiven amount must be spent on payroll. 25% of the forgiven amount will be spent on interest on mortgage or rent payments and utilities. Any advance amount received under the Economic Injury Disaster Loan Advance Program will be subtracted from the amount forgiven. Loan forgiveness is not treated as taxable income. There are no fees. The loan is available through June 30th. The application period started for small business and sole proprietorships on April 3rd, and this last Friday on April 10th, independent contractors and self-employed individuals. Okay, so the Small Business Debt Relief Program is for current SBA borrowers, so 7A loans not made under the Paycheck Protection Program, 504 loans, micro lenders. Certified SBA lenders is who those loans were made with, and debt relief is automatic, but you should check with your lender. And the term SBA will cover all loans on these SBA loans, including principal, interest, and fees for 6 months through September 27th. This is to support the survival and reopening of businesses. Again, prohibited Paycheck Protection Program loans in this, and disaster loans. Existing SBA disaster loans. So existing before this disaster, the deferment is automatic and it's through December 31st, 2020. So your next payment on an existing disaster loan would be January, and interest will continue to occur over this period. Okay. think. Let's see what happened here. Thank you. Appreciate that.
Thank you, Peter. We have a bunch of questions that have come in, but let's turn over to Mark first. Just to, Mark, you can give an overview of, what are you seeing under these programs with your clients? What are some of the challenges that you've had to navigate, and questions that you're getting from the clients? Perhaps things are maybe just not totally clear yet from the SBA.
No, that's great. This program is extremely popular, but implementation of it has been frustrating but productive. The SBA, the Treasury have issued a lot of guidelines. So just to understand what's happening for anybody listening that's interested in one of these loans, accounting firms have been, all of the accounting firms have been bombarded by clients impacted by this COVID pandemic, interested in the SBA loans, and the lenders are requiring borrowers to come into the bank and provide supporting documentation, substantiation, and we need to understand the statute and the rules before we can even determine what amounts are included. So we're looking at loan calculations. We have a tool that helps borrowers determine what amounts to include, these so-called payroll costs, also the amounts that are going to be forgiven. So these are important items. You can't generally, with a lot of clients, you can't just say, okay, you're eligible. Okay, yes, you have all the documents you need, just go on down to the bank. Some clients are in fact being rejected. And a lot of times it's because you're not prepared. So when you're prepared with all the documents you need, you know what you're certifying, and you know what type of loan you're going to take out, you're in a better chance of ensuring that you're going to have this approved. More importantly, a lot of borrowers don't want any debt after this. So we need to know what those expenses can be paid for. So Peter had mentioned that as long as 75% of it is used for payroll expenses, there needs to be a way to track how you're going to use these funds so that when you apply for forgiveness, you know what amount you may have left over as a loan, because a lot of clients really do not want to see additional debt at the end of the 8 weeks period. So there's a lot to learn in terms of covered periods, in terms of payroll costs, in terms of penalties. If you have employees that may not come back, you have to understand what it means to have a full-time equivalent employee. There's so many different variables to determining whether this loan is in fact right for a particular client or an industry, because it just sounds great. We have a forgivable loan, but this is unprecedented, and the tools are still being developed in order to help clients. So we're seeing a lot of good activity. We're seeing that these clients are in fact having success, but we're also seeing clients that have been turned away. A lot of it depends on the bank. And the faster that the SBA and the Treasury produced clarifying guidance, I think it's going to make it better for everybody. As Peter said, I think over a period of time, things will calm down. There'll be more certainty as to how the program works. But that's what we've been experiencing lately.
Thanks, Mark. Peter, am I correct that of the programs you just delineated, it's only the PPP that has the forgiveness feature?
Also in the advance of the economic injury
Right.
disaster loan. And one of the questions, the advance is up to $10,000. And what I've read is that it's based off of $1,000 per employee. So,
Okay.
So that's how it maxes out at 10,000.
Okay. And in terms of all of these different programs, can you stack them one on top of another, or is there an overall limit? So like under the PPP, it's a $10 million cap. If you had received one of the other loan programs, does that eat into the cap, or is it in addition to that 10 million?
The intersection that I've understood on this, and Mark, you may correct me on this, is that they cannot be for the same purpose. And
Right.
That's the whole thing. So if one was used primarily as payroll and the other one's used for rent and stuff, I'm understanding that you can be using both of them. If you took out an economic injury disaster loan before, and you had that in place before you got your Paycheck protection program, my understanding is you can roll a lot of that into the Paycheck protection program for relief, for forgiveness.
Yes, that's how I understand it as well.
A question for either one of you. Given British American Business's profile, you can imagine some of the companies that are on the call here now may be U.S. subsidiaries of a foreign owner. What limitations, if any, would that U.S. subsidiary, assuming it's 100% owned by a UK company, but yet it's a U.S. entity, employing, say, 50 people here in the U.S., what restrictions, if any, would it have in terms of access to these programs?
My understanding is the access is based on citizenship/residency. So if the UK owner has residency here in the United States, then there's no issue. But if they do not, then it would probably be very difficult.
Yeah.
Mark?
There's different interpretations of that. The guidance, particularly the frequently asked questions that were recently released, seem to indicate that a foreign-owned corporation that's a U.S. corporation, but it's foreign-owned, as long as that corporation has less than the 500 employees, that they generally should qualify. One of the bigger issues that's occurring now that appears to have been clarified, but nobody's happy with, is the affiliation rules and related to those that have invested in startups and conditions and covenants. And the SBA has a number of rules on how that applies to minority shareholders, which may make some of these smaller businesses ineligible, even though you're domestic. You are actually treating the VC, venture capital's company's employees as part of your overall 500 count. And that's knocking out a lot of these smaller lenders. But in terms of just having foreign ownership, it seems to me that as long as the U.S. corporation is in fact a U.S. resident and it's U.S. employees, then you should be able to qualify. Perhaps.
I'd like to point out that the size affiliation was waived for franchises and
yes.
But for franchises and food service businesses and things. So that might come down the road again for some other additional industries.
Right. It is also my understanding that if you have those restrictions that I was mentioning to you before, the SBA had said that if you waive these controls or rights that you have, then you would in fact be able to qualify. And the question remains, is anybody willing to waive these rights? I don't know, but that's a current debate right now.
We're getting a lot of questions coming through about payroll and how those payroll is calculated, and also payroll forgiveness and all of that. Again, for either one of you, assume we have a company that, immediately after the outbreak and business shutdown, decided to furlough some employees without realizing that perhaps the government would step in with the PPP. So they furloughed, say 20–30% of their workforce. Under the PPP, you're encouraged to bring those people back in order to have loan forgiveness. Can you explain how that works and the timing of it as well? Because I understand the timing is relevant in terms of when you get your loan to when you have your people back and to when you disperse the funds to be able to have loan forgiveness.
Peter, you want me to take that one?
Yeah, that'd be great.
Okay. Yeah. Well, that is a great question, and a lot of it's a business question. But what's driving the business question is whether you can have these amounts forgiven. So you're taking a moment in time as of February 15th and determining your payroll costs, which are calculated to determine your loan amount. So once your loan amount is in fact approved and substantiated, and you don't have the same employees, or you can't rehire them, or maybe you can choose not to. If you do not spend at least 75% of those loans on payroll costs that were, substantiated at a given time earlier, then that part of the loan will not be forgiven. And that's very important and a motivating factor. So I think I think a lot of clients, and we're actually beginning to talk to some clients, there's another aspect of the CARES Act that provides for employee retention credits. And these employee retention credits, you can't take those and a PPP loan at the same time. It's one or the other. And that is determined at 50% of each employee up to $10,000. So it's $5,000 per employee per quarter taken through payroll tax returns. Now, not confusing everybody with how this operates. The payroll tax returns is a mechanism on which to get the credit. But if somebody decides that they're not going to replenish their staff and they want to operate at least for the next 8 weeks or in the short term with a significantly reduced staff, it may, in some cases, make more sense to use the employee retention credit regime instead of a PPP. But that's not always the case. PPP is infinitely more popular.
Is it fair to say it's not a full measure of forgiveness or not? So you could, if you chose to, have a 20% reduction in your workforce. And as I understand it, you'd then have a 20% reduction of the amount of forgiveness, but the 80% would still be forgiven, assuming you follow all the other rules. Is that right? Look at it?
Yeah. The tool that we prepared and all the other firms continue to use as well does incorporate that it does assume that those amounts will be paid for certain payroll costs at a given time. So we can give, we're trying to provide our clients at least with the most certainty possible. If you plan to rehire or build up staff or what expenses you have, what amount of the loan will in fact be forgiven. And by the way, the SBA, and Peter, maybe you can give us a timeline, did say in the interim rules that the more guidance is expected on forgiveness. And that's very, very, very important in terms of answering some of the questions that you're asking right now.
Yeah, so guidance has been slow coming out, and every day we're getting additional information and everything. But would like to point out that no matter what, with the PPP, most likely the business is going to end up with some form of a loan inside of there. Okay, that it is, as you're just saying, Mark, it's based off of an average salary of $100,000 a year that maxes out at to hit $10 million. So for those 8 weeks, it's what would be involved with the $100,000 payroll per employee, and they're talking 250% of that, or 2.5 times that number. And so you're going to have that, and then you're going to have your additional expenses, your utilities, your mortgage, or your rent. You're going to have, additional operating expenses and all those other expenses. But the only thing that is forgiven, and that is 75% rule, is that 75% is for payroll, and the additional 25% will be interest on mortgage or rent or utilities. Those three items are the other piece of the forgiveness that make up the 100% of what is forgiven. And most businesses will be left with some form of loan. Now, I've been told that somehow that could possibly then be rolled into an economic injury disaster loan. I'm not sure the mechanism to do that. That could take you out to up to 30 years payment terms versus a 2-year payment term. Okay, so thank you.
Peter, just to drill down a little bit on the rent expense.
Yes.
There are, rent for real estate purposes, and then there's rent payments or lease payments on capital expenditures. Is it intended to extend towards those lease payments on capital expenditures, or is it just real property?
My understanding is just real property. Mark could probably go give a better answer than that, but I understand the lease payments and the those additional expenses would be are not in the forgiving category. Okay. That's how I understand it.
This might be a Mark question also, but
right.
clear in the bill of the CARES Act that there will be no tax on the debt forgiveness. Question though is, you know, for those who are listening and they're not as deep in the weeds on these issues as we might be, if someone would make a loan to you and the loan's forgiven, you'd have a tax on the amount of forgiveness.
Right.
The government here is providing a loan through the banks. They're going to forgive the loan. They're not going to charge you tax on it.
Non-taxable income.
In the normal course, obviously, when we all pay our employees and we pay our rent payments, those are expenses of the business and therefore a deduction. How is it going to work when we use this money that's been given to us and then ultimately forgiven, but we're using it for expenses of the business?
Yeah, no, that's a great
expense, or is that out of nothing, or how's that going to be treated?
the way we read the statute, okay, is yes, there's no question there's an exclusion from income, which is very different than an exemption from income. And this is putting a tax hat on here. So when you look at an exclusion for income, in this case, and if you are a solvent taxpayer before and after the loan proceeds are given to you, at the time of that forgiveness, the exclusion from income, it doesn't prevent you from taking an otherwise allowable deduction. So if you want a payroll deduction, we read the statute as permitting that to occur at the same time. Now, maybe Treasury will come along and say something differently, but this is currently how we read the statute.
So it's effectively another
benefit.
Right. It's another 40–50% benefit that you're getting off that money.
That's correct. It's a great question.
Interesting. Let's change gears for a minute because we have a lot of real estate folks that are in the audience, and we're getting questions about real estate companies. And I know at a high level, certain forms of real estate companies are eligible for the PPP, others are not. Can you give us some detail on that, either Peter or Mark?
Well, I mean, Peter, I don't know if you want to talk about some of the affiliation rules that have come out, but we have so many different real estate clients that are organized in different types of entities and so forth. There are some specific rules related to passive income when you get into the small business concern definition. But we see the statute as and it was clarified by Treasury, fortunately, that you either are a small business concern as defined under the SBA Act, which has restrictions for passive entities, passive income entities, or you have less than 500 employees, with the exceptions that you had mentioned before about restaurants and franchises and
right.
nonprofits.
But even those passive businesses, my understanding has always been that the economic injury disaster loan is applicable to those businesses, whereas the PPP may not be at this time.
Okay. We've got different questions coming in relating to, I'll just broadly characterize it, how one is employed, whether someone's an independent contractor or they're getting paid through a PEO. Is there guidance under the PPP in terms of what is defined as an employee for purposes of qualifying?
Well, yes, the statute does allow self-employed and independent contractors and sole proprietors to be able or eligible. There is an open issue regarding partnerships and whether a partner who receive a guaranteed payment is applicable or not. But there is definitional issues that I have yet to resolve. Maybe Peter can address on when you're considered part of a sole proprietorship or an independent contractor for purposes of loan amounts or forgivenesses and the amounts paid to those.
Currently, the way I understand is if, let's say a business has a lot of 1099 employees, those 1099 employees or independent contractors actually file on their own. okay, where the business would not be able to wrap them up in part of their payroll because they're not actually employees of the business. They're independent contractors. And that's whether their sole work is with that business or not, it's they're independent.
And how does that work with the PEOs where under, again, it's my gross understanding of it, but a PEO is its own entity and the company handles its payroll through the PEO. The PEO pays those people, and yet those people are working full-time for the company. Are those folks, even though they're paid through the PEO, still considered employees for purposes of payroll calculations under the PPP?
Yes, fortunately, the Treasury SBA frequently asked questions address that question. And you can treat if you're using the PEO, I don't have the exact language in front of me, if you're using the PEO to pay your employees, which is the purpose of the PEOs, then you can use the payroll that they provide as support for your application and loan amount.
Okay.
So it was a good clarification. That was helpful for borrowers.
Another question I have, if you read the statute, it says in terms of loan forgiveness that the loan proceeds that are forgiven are those which are used for the purposes you've already described, payroll, rent, and so forth, within 8 weeks. I want to hone in on the 8-week timing. Is it 8 weeks beginning when the money is funded, and therefore the 8 weeks thereafter? Or let's say, for example, companies who had to make their April 1st rent payment, but they don't get funded until April 15th. Can that April 1st rent payment be included in the expenditures, or you're only on a going forward 8-week basis?
I think you have two questions there. I think one is, does everything stop at the end of the 8 weeks? And the statute refers to two words, paid or incurred. So depending upon how that's interpreted, for example, if you wanted to pay your rent in advance that occurs outside the 8-week period, there is a question on whether that is considered paid or incurred for purposes of the forgiveness portion of the statute. And that is part of the reason I'm hoping that guidance comes out soon regarding forgiveness. And Peter, I don't know if you have any new knowledge on that issue.
Not specific, but I want to just emphasize here the 75% rule of what will be forgiven is 75% spent on payroll, including benefits.
Can you, Peter, we're getting a couple of questions here. Sort of the more basic question of, or I should say more practical question. How do you actually apply for this loan? You apply through a payroll company, through QuickBooks, through a bank. How does it get done?
Through SBA lender, a traditional SBA lender. Over half the commercial lending firms in the country are SBA lenders, and they, regularly doing SBA loans. And we brought on a bunch more through this the Paycheck protection program, so that number's increased for the purpose of the Paycheck protection program. But it's directly through the lender, and once you apply it, the lender's the only one who can provide you information on that. And basically, you should not expect to hear back from them for 2 to 3 weeks. I know everybody wants to know what's the status. They need additional paperwork. What's there? Really, it's what I've been told is they just get back in touch with you in 2 to 3 weeks and follow up with you and move forward at that time. So
we're learning that there are some banks that will not work with a customer who's doesn't have an existing banking relationship. Has that been resolved yet?
Banks are choosing how they participate. So you take the existing SBA lenders plus new lenders who have been added to it, And I'd say they fall into three categories. One, they're not participating. Two, they're participating with their existing business customers. And three, they're participating with both existing and new customers. And in our New York district office area, we've been reaching out to our lending partners, asking them how they're participating and building a spreadsheet right now. And so when people have called me and talked with me, I've gone through a list and read off to them the names of the banks that I have in front of me that are providing for, anybody who can go and apply to them.
Is that list going to be published, or is it?
It's not published right now. We have a lot of contact information in this draft we have right now inside of it. So we're trying to work through it. But, it's one of those things we've just been, ourselves. It's tough to figure out. We do have a search tool on there where you can look up participating lenders, but it doesn't tell you if they're only their customers or they're willing to work with new customers, people who aren't their current customers, and so it can get difficult with that. So we've been trying to put together something to help out.
Heard a rumor this morning that the SBA is grading the banks on how responsive they are. I'm assuming that's not true.
I can't imagine anything like that's happening.
I'm going to start to open this up to questions in a moment. But one thing that I know has been an issue is the $100,000 cap and how that's calculated. I think it's pretty clear now, but maybe Mark and Peter, you can clarify this. If you've got employees who make over $100,000, when doing your application, you cap them at $100,000. Question I have is, are benefits and tax that's incurred on those people added in excess of the 100? So you can have, for example, you put in for $110,000 for a person that's capped at 100, but there's 10,000 of tax and other payroll costs, or is it $100,000 all in?
Okay, I'll start with, so for an employee making $100,000, the benefits, insurance premiums, that is in excess of that. So it's at 100,000, and then you would have the benefits, insurance premiums, and everything on top of that. There now, as far as an employee making above that, I believe it's calculated, everything's the exact same way as that person is making just that $100,000. But Mark, you probably have more guidance, because I haven't honestly seen anything on that.
No, well, that part is, we're actually doing a pro rata amount just to be safe. But at any rate, that's very important, because the statute uses the word compensation and didn't define it. So what Roger's referring to is indirect compensation, and can it be broadly construed? And fortunately, the Q&A addressed it and said yes, but for certain items. In other words, it's a cap at 100,000 cash, except for these items, and they listed the three, including the benefits, and that was great. Thank you for that, because that was a huge source of confusion early on. And so that can be included. But I think the more narrow issue that you're asking, Roger, is what if you're over 100? Do you prorate that amount over 100, or just lump it all in? And I think you're going to see people all over the place on that one. I don't know if the guidance was that clear. It just said you can include benefits. It didn't say you have to only assume benefits up to a certain salary amount, up to 100,000. These, again, into granular questions, which is what we do, but that's what a lot of this new program is doing for all of us, kind of all together.
When the statute first came out, it did mention pro rata. Then the guidance came up, and it seemed like it was a full cap. So it was, I think there's differing understanding or views on that.
All right.
Time will, I guess it'll wash out in the forgiveness phase of things.
we hope.
In terms of, you mentioned, Peter, that, to expect 2-week turnaround. Do you have any sense of how much of the money that's been allocated has been dispersed at this point?
I was hearing that last, whether it be for the advance or whether it be for, you know, I believe for the advance that the first disbursements were happening last Friday with the Economic Injury Disaster Loan Advance. Whether the Paycheck Protection Program that started on the 3rd, so we're probably not there as far as the disbursement of the money, I'd imagine at this point. My understanding is the financial institutions will be back in touch with the borrowers in 2 to 3 weeks, and upon that time, and if any additional information is needed, and then following that, you're closing and disbursement. So, you know, I think we're still a week or so away from that.
And then focusing on the independent contractors, because you mentioned earlier, and the guidance is pretty clear on this. Starting April 10, independent contractors, 1099s, could apply on their own. Do you have any sense of how those applications have been handled, and is funding probably even 3 weeks away for those people?
I have, you know, these are done through the private financial institutions, and I have no feedback on that. Mark, you probably have some experience with your customers, your clients.
Yeah, we have a lot of, we call them Schedule C. We got independent contractors or sole proprietors that are, in fact, they have applied. I don't, as of Friday, I know of a tax exempt that actually got funding already, but I haven't heard a status yet on the independent contractors on where that is. I know that various banks are, you know, they all have a different view of things. We're all kind of confused together and, you know, dealing with an influx. But some banks more than others are more adept, I think, at processing funds. But again, that goes to the back offices maybe of SBA and some computer systems I heard about. So that's all I know right now.
And Mark, in terms of nonprofits, you just mentioned, 501c3s are covered, correct? But others are not. Is there, what's the thinking there?
Oh, why certain nonprofits were excluded?
Yes.
And you know what? That's a great question. I don't know. And maybe Peter, you might know. All I know is that I noticed that very clearly. It was fairly narrow.
Yeah, I know there's more nonprofits than just 501c3s, but I do not have not seen the list. But I do not know why some are and some are not, as you said.
Because like social clubs are excluded, and other types of. I'm sure there was a public policy reason for it, but I haven't had a chance to focus on that.
Okay. If you say social clubs, it makes me think general SBA lending does not work for any organizations that prohibits membership for any reason other than size,
Okay.
you know, or capacity.
I'm going to open it up now, the next 20 minutes for people if they want to have specific questions, to use the Q&A bubble down at the bottom of the screen, and we'll try to answer, you know, as many as we can. Here's a question that has come in. How do you handle part-time employees, someone who's worked, you know, maybe 28 hours a week? How are they calculated in both, you know, the idle calculation as well as for the PPP?
But we are including part-time employees in the calculation. For determining what a full-time equivalent employees for other purposes like restoring your workforce, there is a formula that does take into account a minimum amount of hours to be considered full-time. So if somebody is doing less hours, they're a part-time employee, you do a calculation of how many hours that all of these employees have performed, and then divide that number so that you can determine exactly how many full-time equivalent employees you have. It's formulaic, but there's two parts to it. You have to remember, we're always talking about the loan amount first, how many employees you have, what do you count for purposes of the loan, and we are counting part-time employees. And then there's the second part of forgiveness, and whether you had a sufficient amount of full-time equivalent employees to get the forgiveness, which we hope guidance will help clarify.
Right, and you're looking at the payroll for these calculations for over for a year period, 12-month period. So everything, your normal operations should be included in that. And then they have guidance for seasonal entities where they look at maybe you look at it on a quarterly basis that would reflect your business operation on seasonal operation.
And I asked this earlier as it relates to SBA programs, but there are city and state programs as well for disaster relief. Are any of those calculated in limiting what you can get from the SBA?
I'm not familiar with the overall additional programs you're referring to, nor do I know their interaction with SBA programs.
Okay, I missed that. Roger, which program were you referring to again?
New York City's come out with some New York City specific loan programs
Right.
that are separate apart from SBA. And what I was curious is whether or not the SBA can take those into account when calculating either loan forgiveness or amounts of loans or any of those.
Oh, I think these specialized local programs, and I know New York City has a few. There's continuity funds, there's grant funds, there's a lot of them that look very similar. Some are loans, some are grants. I think I've looked at them. I haven't studied them with great detail, and I was specifically looking to see if there was an interplay with the PPP or other SBA programs, and to the best of my knowledge, they look like completely separate programs. Is that your understanding, Peter?
Yeah, there is no connection to the programs. They're run completely separately. Whether the SBA in the application process asks if you've received any other funding in support of you over the disaster, because I know in a traditional disaster scenario where you're getting insurance coverage for part of the damages, so if your total damage was $300,000, your insurance is covering $100,000. The SBA is only going to give you $200,000. The object is get you that $300,000 to keep you whole. It's not to hand you an additional amount of working capital. It's to keep you whole. Okay, to try to keep you where you would have been without the disaster.
I got a question here about using the PPP to pay interest. Does it extend? It's interest on mortgage interest that I think is pretty clear. But if the company has a existing line of credit and is incurring interest expense under that, can the PPP funds be used to pay the interest on those debt items?
The funds can be used to pay that, but that, from my understanding, that would not be an amount that would be under forgiveness.
The issue is forgiveness. Okay. And the forgiveness statute is fairly clear that the interest needs to be secured by property.
Maybe it's worth spending a minute. If someone were to fully understand, okay, if they're willing to treat it as a loan as opposed to a grant, are there items that are just absolutely impermissible to spend the money on? Can you go on vacation? Can you? No one goes on vacation.
Well, you've made certifications. You've made certifications on the application, on the use of funds, among other things. And I think if those funds were in fact determined to be used for an impermissible purpose, I'm sure that there's some enforcement mechanism that would not be pleasant.
So broadly speaking, as long as you use the money for your business, you'll be on the right side of the law. You may not be under loan forgiveness, though.
But most of it, as long as you follow the 75% rule when you're identifying your expenditures with the money, that 75% of what will be forgiven is payroll, and that'll help guide you.
Okay. Got a very specific question about a 501c6. Are they eligible to apply for the idle forgiveness loan?
The only thing I've ever seen for there just says nonprofits, and I believe it was 2.75% interest for nonprofits. And again, it's up to $2 million and up to 30-year payment terms.
Yeah, I'd have to look. I don't know if IDLES had a similar restriction that the PPP has. It might be more broad because, and it wouldn't surprise me if it was, because it's a loan. I think the forgiveness feature of the PPP is what adds a lot of restrictions. So I don't know the specific answer. I'd have to look that up on whether it's expanded to everyone, to more types of tax exempts, but that could be, we could find that easily.
Question here, interesting question. I'm assuming it's a small business owner. Their question is, can they count themselves as an employee? In other words, put themselves onto payroll if previously they were just taking out whatever profit distribution the business had and were not considering themselves as a W-2 employee?
Well, remember, we have a covered period. You have to look at your payroll for the previous 12 months or in 2019. So they weren't an employee, then I think it'd be very difficult to support a loan. Peter?
Yeah, I concur with that. It's based off of 12 months of payroll. You know, it's giving the businesses a good time frame to establish what they need to operate.
We've got a few banks that are participating now. Peter, maybe in particular, is there anything that you can impart to the banks in terms of things that they should be looking out for to assist their customers, or how to maybe access this process a little more easily?
I've just, you know, just the communication is one thing, and then we're all having a difficult time with that, you know, right now. But for the most part, when people are reaching out to me with questions and how to process the Paycheck Protection Program, they're, you know, just in general communication, they've been saying they're having a tough time with their financial institution, and which is understandable, but that'd be so important.
I mean,
We've stayed in very close touch with a lot of financial institutions, both large and small, and we're all working together to try to make this work. I think it's my understanding there's going to be even more guidance coming out to the banks for you know, to assist them in having more of a say in how they're going to, you know, process these loans. I believe that's what at least I've read, but by and large, I think you know, they've been hit with a lot of demand all at once with all the information we had, and so we almost were forced to work together to try to get this right. So it remains to be seen how this all plays out in the next few weeks.
well, I think we're seeing a good public-private partnership between the banks and SBA. You know, it was, I think, clever in terms of saying, okay, the banks will do the underwriting and the processing, and SBA will just approve the final application, because that streamlined the process. Peter, it must be a huge effort at the SBA where, you know, this was not the day-to-day activity of the SBA, and all of a sudden every business with 500 employees or less is filling out these applications. What's it been like behind the scenes in terms of being able to process all this?
The processing, the whole thing's been quite interesting. We've moved and we've contracted with businesses. I think in the beginning, we have our economic injury disaster loan, which is a traditional disaster loan, but once it took us a little while to roll it out. And then once we rolled it out, we did have it crashing, because traditionally you see a disaster hit like Sandy hit the tri-state area, or you see a hurricane hit Florida, or you have something hitting the Texas panhandle, you know, over there. It's a regional thing. Now we have all 50 states and U.S. territories. So the amount of broadband and everything needed for that was excessive. And traditionally we have disaster centers for people to go in and process through with SBA and FEMA. And in this scenario, we do not. So everything's been online. Everything's been, interactive in that context. So it's been contracting out. So on Monday, March 30th, we launched a streamlined economic injury disaster loan application where anybody who hadn't applied, who had already applied, had to go back and reapply, and that got them into the advance. But with that application process, somebody I saw it said, oh, it'll take maybe 2 hours. And one person I was working with talked to him. They told me it'd be about 2 hours. But since you already have your information, it would hopefully it should be much quicker for you since you had previously applied and have to redo it. He came back to me and he told me it took him right at 15, maybe 16 minutes at the most to do the application. So it is a very streamlined application process. And it could be only additional information needed, honestly, could be just to run a credit report. So it's very streamlined. And so that's all new. So that was the SBA and contracting outside of the SBA for the bandwidth and the application process with private lenders, going to the SBA's partners where we, on a regular basis in the field, we have our lenders who lend the money, and the SBA guarantees the money as a safety net to businesses, where we have two, our traditional 7A and express loans. And we also have international trade loans, and then which can be guaranteed up to 90%. And then our 504 loan. So we have all these loans which are done through the financial institution, and the SBA guarantees anywhere from 50 to 90% of those loans, and for the bank to make the loan. So expanding upon those relationships, and it's just been with everything new, there's going to be some glitches. So we saw the economic injury disaster loan. We had some glitches. We got some private partners involved, and it's moving very, very well right now. And same with the Paycheck Protection Program. As the financial institutions who we have a relationship with and expanding that, they roll it out, it's going to become more and more efficient, and we're going to get answers to all these questions and really dig down and see how it all functions. It's just going to improve.
Thank you, Peter. I appreciate that. And maybe that's a good wrap up. Mark, is there anything you wanted to add before we close it out?
Well, this doesn't relate specifically to PPP, but I do want everybody to know that just late last week, the IRS has extended the deadlines for most, if not all, returns, forms, schedules, that anything that would be due between April 1st and July 15th. I mean, it's been extended to July 15th. So for IRS purposes and most of the states, there's some relief on tax filing, because this would traditionally be tax filing week for at least individuals and calendar year taxpayers. But it's very, very welcome relief. It just came out. We posted a lot of information on it. And
we're not getting any love from New York City, though, are we?
Yeah, you're not getting much of a break from New York City. They said they would consider a request to waive penalties, but not interest.
Roger, I would like to say one other thing. We have the SBA Disaster Center, Customer Service Center, and they have hired an additional 7,000 plus people and are running 24-hour customer service there. And that's,
wow.
It's a disaster customer service at sba.gov.
That's terrific. Well, Peter, thank you for all that you're doing for all our businesses and your time today. And Mark, thank you for your great insights. Duncan, I'll turn it back to you.
Well, thank you, Roger, first of all, for moderating the session so well. It's been a fascinating hour. Thanks to Peter Fennel at the SBA and Mark Brannan at Marks Paneth. And I think the whole conversation just brings home to us and to me, how vital cash flow is for businesses of any size. And we've never seen anything like this. And interestingly, You know, I tend to feel that the kind of the instinct of government on both sides of the Atlantic is in the right place. You know, what they're trying to do, trying to get cash into businesses, is right. The challenge, of course, is execution. And but both here in the US and in the UK, getting cash to those businesses as quickly as possible is going to be absolutely crucial for people retaining employees, and in some cases kind of staying in business. So that's what it's about. We really appreciate the openness of the SBA. Thank you very much, Peter, for coming on. And Mark, I know you guys must be very busy, and good advice to our members: get hold of a good accounting firm to help you navigate this crisis. And Mark's Paneth is one, and there are others in our network. So thank you very much, Mark. As Roger said, we'll be back with more in this series in a couple of weeks. So keep an eye out on babinc.org for information about more events, more webinars in both the Accelerate series and more broadly in the work that we do at BAB. Thank you all very much.